Hey everybody, Colin here, and wanted to kind of change gears here. Most of my videos, I'm sure you'll realize, are in Forex, but I am a very avid crypto trader and investor as well. I believe very much in crypto, and I just wanted to, since I see so much emotion out there in regards to what Bitcoin is going to do next, I thought that I would just share my thoughts. These are just my thoughts and my opinions, of course. But I wanted to give you some food for thought so that you could check this out. Okay, so of course we got to go back to where we can find some data. So I've looked over in Bitstamp, and we are back here on the 2014/15 chart, right? Which is also known as the analog. Basically, what we're looking at here, it almost seems like it's a carbon copy when we look at 2018 to 2019. It's almost like a carbon copy of what happened in 2014, 2015, which I'm sure you've seen and heard by now. But of course, it's very easy to get caught up in emotion when you finally see some life come back into the market, and you're seeing Bitcoin, pump by 20% overnight, 20-25% overnight. Then everybody starts, FOMOing, FOMO, fear of missing out. And of course, that can be quite dangerous. So when you're trading, you want to make sure, you want to do your best to remove emotions, because emotions will often cause you to make a very, very bad choice when it comes to trading. So how about we just look at the charts and see what the charts are actually telling us. So we can see here in 2014, there was a, just at the end of the previous year, there was a massive run up like nothing you've ever seen, right? I mean, from $119 to 11, so call that 1,000%, right? That was like 10x. But then, of course, we saw a massive drop. So it came down here, and we realized the candle came all the way down here. So that's one time. Went back up, came down again, found support again around this level. Two times. Came back down again. A third time. Pierced through. Came back down. Fourth time. Made a big rally up, but of course made its way down again to this massive support level, and then it broke through it, right? In terms of having a candle close below this line. So if I were to, let's see, let me just get a line here. Let me just draw a very simple horizontal line right here. Okay, so as you can see, all this time that it was coming down finding support, we didn't really have a candle close through this line, okay? But when it did finally break through and we had a candle close through this line, then this line started to become resistance. And it broke through the 200-day, then the 200-day started becoming resistance, right? It tried fighting its way through, tried twice, and after getting rejected the second time by the 200-day, it plunged down even further. So looking at 2019, once again, you're seeing the same pattern, right? We had a run up unlike anything anybody had ever seen in so long, at least, right? So same thing if you look at where this all really started, kind of down here, right? Just at about 1,200, somewhere around there, almost 2,000. Ran up to 20,000. So once again, you're looking at 10x, 10, 15x, and then it came all the way down, found support here, bounced up, found support again a second time. Look at where this candle is right here. Found support again a third time, and a fourth time, and then the fifth time. Right, notice it's the same thing we had over here, right? 1, 2, 3, 4, and then on the fifth try, it broke through. Look at this. 1, 2, 3, 4, and then on the fifth time, slowed down and made its way through. After it went beneath the 200-day, look at this. It came up once, came back down, came up twice, and then had a massive fall. What did it do in 2014? It broke through on the fifth try, came down under the 200-day, came up once, came up twice, and then had a massive fall. Now let's see how much did this thing fall by. Let's see, after it broke through the 200-day. Let's see, there, where's that, the wick right down here. So you're looking at about, call it 60%, right? And if we look at this particular drop here, when it finally broke through the 200-day, we do that. We go down to the bottom here. Look at that, we're going 52, call it 53%. Okay, so very, very similar behavior. Now let's look at this again. And of course I'm up here on a 3-day chart right now. Now let's look again what happened. Then we saw that the 50 moving average, crossed, and they call it a death cross at least, but on the daily chart. But however, the 50 went through the 200 moving average, okay, and this signaled that huge drop off down there. Over here, what happened? The 50-day, when it crossed the 50, when it crossed the 200 MA, look at that massive fall again, okay? Massive drop. Notice the pattern. 50 went through, and then afterwards, the 100 also broke through the 200 moving average. Up here, the 50 broke through, and then not too long later, the 100 broke through, okay? Now, let's see. So let's take a look at what else happens. Now we have something very peculiar going on. We're talking, what we want to look at right now is, we are at a point right now in this particular chart where this chart is moving a little bit faster. It's moving at about, I think, maybe 40 days or so ahead of what this chart was doing. And the reason I say that is because let's take a look at when the 50 moving average crossed to where it actually connected. Let's see, right? When it broke through the 50 again. So you see that the 50 moving average, once it was coming through, it then served as resistance. It tried it once, it tried it twice. Third time it broke through the 50 and started to make its way up to the 100 moving average, okay? And that took, well, let's see, this took about 176 days for the candles to close above the 50-day. If we look over here and we see the same thing, once this broke down past the 200 moving average, how long did it take for it to actually break past the 50 moving average again? 134 days. Right, the other was 176, this is 134. So we're about, call it 44 days faster on this chart, the 2019 chart, than we are on the 2015 chart. Okay, so we're just looking at timing, right? We're just messing around with numbers and times and stuff like that. We're looking for similarities. As you can see, there have been a lot of similarities so far. So this is actually where we seem to be right now, because this is the first time we're looking at the first interaction with the candles and the 100 moving average on the 3-day chart, right? The 100 moving average. We'll see that when it broke through the 50, it made its way up, made a nice run up, and we had a wick that went all the way back up here. Now, why was this significant? Well, this was actually right up top from where it had its massive fall, right? This big breakdown right here. If you look at it. If you look at that, okay? Right there, where we had this massive fall off, it actually, this wick came right back up to where this fall started. But if you notice, it pierced through, let's zoom in here, it pierced through the 100-day, and then it took another jump up to that previous support level. Once we break through support, it then becomes resistance, right? So it went up to that previous strong support level, and then look at what happened. Takes another good dip down, comes up for a little bit, and then a nice big fall. Let's see what that is. Went down about 32%. Right? Went down about 32%, which pretty much was back down, very near to the previous this capitulation candle right here. Right? Pretty much went down to the previous support level. And then when it came from this, hitting this pretty much this bottom here in the second time, then folks, the bull run started again. When this 50 crossed over the 100, and then it got over the 200. So once again, what I'm paying attention to is, it seems to me that we are at this point right here on the 2015 chart, 2019. This is the first time that we are interacting with the 100 moving average since it crossed down below the 200 day. See it? 200, the 50, the 100. Look at the similarities. The 200, the 50 went down first, and then the 100 went down first. How long was it between those times? Let's look. Right about here. About 59 days before the 100 went below the 200. And here in 2019, what do we got? 39 days, right? So a little bit, 59 days, 39 days. So like I said, it's happening. Whatever has been happening in 2015 is simply happening a bit faster over here. But we're paying attention, because this is where I think we are. And if this follows this chart to the T, I personally, I really don't think it's time to go above 6,000. So I just haven't seen that kind of thing work in the charts, because 6,000 was such a major, between 5,700 and 6,000, because that was such an incredibly major support level for 2018. Breaking down below it now, you're not going to break back through that in just one go, and then all of a sudden it takes off into the bull run. That's really not going to happen. I definitely know that we're coming back down, right? We're coming back down to retest. Based on previous history, I would expect us to come back down to test the low 3,000s, low to mid 3,000s. Maybe we find support, on the 50 as it's moving down, but I would expect it somewhere in this range. However, based on history, what it did in 2015, if we're following it to the T, that means this would have one more kind of run up, and we may come up into the 5,700/6,000 level, get a big time rejection, and then we are headed back down for a pretty big fall. As you could see, what did we do last time? We came up, and if we look at from the highest point, let's take a look at that. 37% from the highest point. So almost 40%, almost a 40% drop. So if we took a run up and we went up to 6,000 and we decided to fall 40%, that takes us to around 3,600, right? So this is what I'm expecting, just going off of the pattern, right? I mean, the pattern is really undeniable. it is really undeniable. So I'm just doing this based on logic, not based on emotion. This is what I'd expect, but I'd be looking for this nice healthy correction. And as we can see, I mean, the 50 is starting to slow down its downward descent, which means it's going to start leveling off, and then it's going to start to make its way up. And when it crosses the 100 moving average, look at this again. When this crossed the 100 moving average, folks, that was a big deal. That started it. That actually started it. And look at this. It came. Woo, massive, massive run up. So that's what started, folks, when it crossed over the 100. And I'm looking here on the 3-day. That's just looking off of the charts, right? Some people look at the weekly. I'm just zooming in here on the 3-day. So that is my take on Bitcoin and what I think it will do. Of course, it's Bitcoin, and so we know anything is possible, but I'm just going off of history where, I would expect maybe just one more jump, maybe up to between the 5,700, 5,700 and 6,000 level. And then a nice dip all the way back down here, somewhere between mid to low 3,000s. Yep, and then it'll probably move sideways for another month or two maybe. And then I was just looking for it to cross over that 100-day and start to make its way back up. And then I think we will be in business. So just wanted to share that with y'all. Hope that was beneficial and helpful. So yeah, it's important to back test, pay attention. I definitely believe that the future of any coin is located in the past. So if you look at what happened before, it's going to tell you, the chart will tell you what's going to happen next. It always does. So, okay guys, so we're looking at this point right here. This is where we are, and I think on the 2015 chart, that's this point right here. This is where I think we are. So let's see how this goes over the next few weeks, and I'll be back another time. Take care, guys.